Good evening, fellas, and welcome to another video with me, Vince, at Modern Man Lifestyle. Thank you for joining. Today what we're going to be talking about is investing. Maybe it brings an image or a video, something like this.
The world of investing can be a jungle. Bulls, bears, danger at every turn.
Maybe it makes you think of insane situations like this. But really, what we're going to be talking about is investing, building on our last session, which was on saving. So you've started saving some money and you want to start making that money work for you, which is really important. Once you start saving, it's really important to have 3 to 6 months worth of saving as a kind of hazard fund in case anything really bad happens, you lose your job, you need repairs in your car, your house. Now for me, the simplest, the easiest, and the one with the least amount of work and legwork you have to do is investing in stocks. Now when we think of investing in stocks, sometimes we can think of some dangerous people. We're giving our money to strangers we don't know who are fast talking on the phone and they're going to do stuff like this to us.
And who can consistently make you money. Sound fair enough?
No, yeah, I gotta say I'm pretty impressed.
In fact, it's very easy. You can do it all by yourself. It's very simple. You can get some very low risk stock. You can put that in monthly. You can leave it and it does it automatically. You never have to do anything about it, but just watch it grow and grow and grow. Finally, it is so important that your money is working for you. You might have heard that term before. Essentially, when you put your money in a bank, the bank has so low interest rates that you might put £10,000 in the bank, you are earning 0.05% or something, 0.01%, tiny increments on your money. Bearing in mind that inflation is 2 or 3% every year at a minimum, which means your overall value in a bank is losing money. So you actually need to be hitting 2 or 3% growth on your money just to maintain with inflation. So what we want to be doing is we want to be making 3, 4, 5, 6, 7, 8 and upwards percent, so that not only are we beating inflation, but we're also growing our money and that's snowballing. Now what I'm going to be talking about today is a number of stock concepts and ideas that I use, that a lot of people, you'll find videos all over YouTube, all over the financial circles would recommend. I'm not a financial advisor. These are just some of the best experiences I've had and the best knowledge that I have from what I've been working in the last 5-6 years. What I'm going to do is I'm going to share my screen with you and show you a couple of the main key stocks that I would recommend using, or areas. I'll recommend the platform that I use in the UK, and I'll also show you where hopefully your money will make the biggest bang for your buck. Okay, so without further ado, let's get into it.
All right, so what we're going to talk about is investing in the stock market. Now, one of the biggest things is understanding that you don't just have to invest in one company, which carries a lot of risk. If the company has bad news, a bad year, the stock price can go down. What I want you to focus on is investing in the market itself. And one of the main ones in the UK is called the FTSE 100. And what that means is just the top 100 companies trading on the London Stock Exchange in the UK. And when you invest £100 in a month, that is divided around all the companies. So it's £1 in each company. That means you are, in essence, invested in all of the companies, and your stock is not tied to just one single company, which has a lot of risk. So what we can see here is the current stock market, and it's up 15% in the past year. If I go to the max here, you can see that since this started in the 80s, that's up 565% of growth. Now, there's two ways that you make money on a FTSE 100. One is the growth, so like this, the 15% a year, growing every year. The companies get bigger, they have better years. The other is dividends, and essentially what dividends are is if a company has a good year, they have lots of profits, they share a slice of their dividends with you. Now, what that means is if you consistently buy into something like this, you pay £100 a month, £20 a month, whatever it is, over and over and over time, this snowballs into a massive chunk of money, which is constantly growing. Now, the main thing to do is make sure you reinvest any dividends, make sure all of that money is going back into your little pot there. So that's the FTSE 100. Another of the main ones in the UK is the FTSE 250. And what that is companies from the biggest 101 to 350. So it's the biggest 250 companies out with the FTSE 100. And actually this one over the last 5 to 10 years has had huge growth potential. You can see it's up nearly 19% this year. In the last 5 years, it's been up 32%. And since it started in the 90s, it's up around 400%, which you can see is amazing. So I put money into both of these accounts. I put in a small amount each month. I set this up automatically, and it just consistently goes into there, and it snowballs and it builds. Another one you might look at is the S&P 500. This is the American Stock Exchange. Again, it's the same concept. However, this is looking at Fortune 500 companies, so the 500 biggest companies in the US. Same concept. You're investing in tiny little parts of all of these companies to spread the risk, but also to get the benefit of all the growth of the different companies. And you can see that's up 30% this year. The American Stock Exchange is going skyrocketing. So the next thing you're saying, Vince, I don't get it. How can I put money into an account and it just grows and grows and grows? Well, allow me to introduce you to the compound interest calculator. Compound interest is the 8th wonder of the world, said by Einstein himself. Now, let's just take some money here. Let's say you've got £1,000 and you want to put that in as your initial balance. The interest rate, that's how much money you are getting on interest every single year. And the FTSE 250, they say on average is 11% a year. FTSE 100, they say the average is 7% a year. So let's just call that a healthy 8.5. And let's say we're going to do it for 30 years. Now, this stock is very, very low risk. It's a long-term stock plan that I would suggest. And let's say you can put 250 quid in a month. Let's see what this kicks out. $425 grand at the end. Now, let me show you here. What this breaks down as is you've invested £90,000 over that total time of 30 years, but you have gained over 300 grand in interest. Now just look at it here. So this is the interest you're making each year, and you can just see that growing and snowballing. Because if you imagine, you started off with 1,000, but you're putting in 3,000 a year with your 250 monthly. See at the bottom here, you've got £25,000. You're starting to get 8%, 8.5% of interest on the total agreement. So you can see 2 grand of interest a year. That's pretty good. And as this grows and grows, it builds and builds until in 30 years time, you have a huge amount. Now, what I would recommend is I recommend that you select a number of indexes around the world. So there's 2 in the UK, there's 1 in America. You might look at the Japanese index. There's even a European index, which looks at the top companies in the European Union or mainland Europe. And I would see how much you have available. Now, it's important that you don't invest money that you need or you can't afford to lose, or you don't want tied up in anything. I would suggest, what money have you got over and above all of your normal expenses and bills? Let's say it's £100 a month. That's great. I would recommend putting £25 in 4 different funds to spread that across. Make sure you're covered on a global sense. Now, moving on. How would I suggest doing that? I would suggest using Hargreaves Lansdown. They're who I use. They've got quite a simple platform. It's easy to use. They've been around for a long time. Now, what that looks like here, Hargreaves Lansdown there. The most important thing to do when you do this, and I can't stress this enough, is set up a stocks and shares ISA. A stocks and shares ISA is where you can trade on the stock exchange. You can put money in monthly, but it is not subject to tax. You have a £20,000 tax relief a year. So you can put £20,000 as your stocks and shares ISA per year. And even if that money, that 20 grand you put in, makes £1 million, you are not taxed any capital gains. If you open a funds account or any other account, you will be taxed capital gains at the end when you try and take your money out. So that's really important. Now, most people are not going to be putting 20 grand in there a year, but you can max that out if you want. What this allows you to do is put your money into the stocks and shares ISA. It allows you to choose the funds that you want to. It allows you to set up monthly direct debits. So automatically comes out of your bank. You don't need to worry about it. It just comes out and invest in the stocks you choose. And then none of it is taxable at the end of it. And that's the main thing, because a lot of times when people are doing investments, they're worried, what is the tax I'm going to get at the end? I'm going to get whacked over the head with a massive fucking tax bill. So a couple of the ones that I would recommend that I use are the Legal and General UK 100 Trust accumulation. That's important because that encourages you to reinvest any profits or dividends that you get. And the HSBC FTSE 250 index, again, that's accumulation. It's got this little star next to it. It means Hargreaves Lansdown have recommended this fund as being very good. Now, the main thing is what I recommend, and you'll find this all over YouTube and the financial investors, is do this consistently, do this over a long period of time, and just make sure you're dripping money in every single month. It's important to note that you don't need to use the ones I've done. There are plenty of ones there. You can use the Vanguard index accumulation of Hargreaves Lansdown. You can see it there. I've used Legal and General, but you can use Vanguard FTSE 100. So to recap, I'd recommend setting up a Hargreaves Lansdown account now. Always do stocks and shares ISA because you get the tax break. And then I would start putting money away, only money that you can afford, nothing that you can afford to lose or you need right now, into different markets like the UK market, FTSE 100, FTSE 250, Fortune 500, and perhaps other ones around the globe.
So thank you everyone for joining. I hope you found that video on investing useful. Please, if you have any questions or is anything I didn't cover that you would like me to, comment below. Don't forget to like and subscribe, and we'll see you next time.